Hey traders, Nick Shaheen here, recapping the week of Christmas ending 12/26 Friday. Short week, one day off, half day off, very low volume, obviously. And the scoreboard today was bullish. The Dow only up 0.13%. I say only because we were stronger in the beginning of the day. The SPX is up 0.33%. NASDAQ led up 0.7%. And the small caps slightly behind that, up 0.6.5 to 0.7%, depends what you look at the IWM or RUT. So all in all, a strong rally. We were in all-time highs on almost everything except the Nasdaq because of the debacle at the dot-com bubble. So, even though the price action is bullish, I'm not jumping on the bullish wagon to where, 2015 is going to be just like 2014 and 2013. Definitely not 2013. So, here's the recap of today's action. We opened up really strong, ramped up, stalled for about half the day, then ramped up, and then something happened over here. That's why I put these arrows, and it coincides with these arrows here. This is the S&P, and this here is Apple. Looks like a whole bunch of people stepped into Apple right here and lifted the S&P temporarily, only to close weak. This is twice in a row that we close weak. That's something new. That's something really new, and I pay attention to anything that's new because it's a break in the trend of things that happen, not the trend of prices. So Apple rallied up against open interest resistance, so closed. I expected it to stall at 113. Definitely 114 was a stronger stall level, and it closed at 114 almost. So still within the open interest forecasted data. However, I didn't expect it to run 1.77%. It is 13%, or actually it's probably closer to 15% right now. Okay, so it all alone is responsible for about 0.26 of that 0.25. So half of a percent would have been if we neutralize Apple up on the NASDAQ. So this is the grosso modo picture of the day. Oil down 1.7%. Bonds rallied today, so stocks should not have been green. Bonds and stocks should not be rallying in the same direction at the same time. Rates were down. So rates down, bonds up, that makes sense. However, markets up in that environment does not make sense. To add to it, the VIX is up, closed 1.5% green. In fact, it was over 3% green with minutes to go. So something is not right. I'm waiting until Monday to see who's right, who's wrong. Okay. So how did the week fare? This was the day. The week. We are looking at the SPY. First of all, the volume this week is about 1/3 of that of last week, which is fine. It's a short week. The candle of last week was insane. I still don't have a real explanation to that 212 tick up here. It's like everybody's ignoring it. I will too. So this is a green week, obviously. The candle did not close at the high, which is fine. We're still at all-time highs, and the only knock on it, if I wanted to knock it and be a jerk about it, and then tick off all those bullish people, is that I can draw a line here, a dirty line, meaning, is it topping off? Is it this line right there where we're going to slide down? Is it this line right here? You know what I mean? So, just something to look at. Meaning, I don't rush in long with both feet. I add a few shorts up here cautiously, credit call spreads. I may go a few longs here. We did. GoPro, Google, Tesla for a while back there. Baba flat today, but I'm not too freaked out about it. Priceline earlier in the week, couple weeks ago. So there are some opportunities. So this is the S&P. So how did the week look for the NASDAQ? The NASDAQ is, I'm going to look up the Qs just so we can see volume. Also, volume was about 1/3 last time I checked of last week, which is fine. Slightly up, so not topping off like the SPY, but it's still, we need to, the recent highs need to be revisited and see how well we're going here. The trend is still higher lows since this dip right here. Higher lows. I always want to make sure I'm saying the right things there. So if I wanted to be a stickler about it, I can do this and see where it goes. Again, I'm not piling in long. I'm more inclined to start a few shorts way out in time with a good buffer, and then maybe nibble on a few longs shorter term. what did the small cap look like? And that was the story of the day. They've been trying to close above 120. Today they succeeded. But there's one thing I wanted to look at with regards to these pops, and I'll tell you in a second. All right, so the candle is definitely green, definitely stronger than this candle that dwarfed all the other candles. This is an expanding pattern, so it's usually bullish. If they break out of it, it should have room to run. I'm still not buying the breakout yet. First of all, it's a short week. I want to see a legitimate one. Well, this is legitimate, but it's still this line here has been solid. So I want to see how they handle this line right there. Okay, so it is peaking. They wanted it to close above 120, and there it is. So it went ex-div on Wednesday, so we'll see how that dynamic plays out. The one thing I just mentioned is the fact that this line right here, nope, sorry, this line right here, this line is the pop on the ES when we had the 5% GDP announcement, and 5% was like the best in 11 years, and we got there, and today we closed under it. This is the ES, so the E-minis. I think it's pretty important to note. Another place to note is the 312. This is the NASDAQ version of it, and if I want to zoom out, I'll show you what I mean. Where is it? 4312. This one right here is where the the 5%. Let me zoom in a little bit. The 5% GDP report came out, which was the best in 11 years. Where is it? There it is. So today we closed, we're at it, and we broke down through it into the close. Just a mental note. Keep that in mind. Okay. Good breakout. This line right here, 4,300, has been kryptonite, I've been calling it. Today it busted through it. So what do I do from here? I don't chase anything that I don't know fundamentals, and I don't believe that it has better upside. I'm not chasing the trend, meaning I'm not chasing everybody else is buying. I want to buy based on fundamentals. Okay, so GoPro is one I mentioned, and I've been drawing lines on this one, trying to make sense of it. And I came up with these green lines right here, and I said, okay, so we have potential that it's playing this range up and down, up and down. So it wanted to come down to here. It fell short of that, which is fine. Turned around, and then I said, okay, maybe now it's looking to go up to the green. So lotto longs will be good. We took some lotto longs on Wednesday, and they worked. That's double the money by today. I also added to the fact that I financed them with credit put spreads. So strategies like that can play. Now, if indeed it's playing this range, maybe now it's probably too late to go long GoPro from here, especially after another day of over 4%. However, I want to watch it to see what it does at 75. If it breaks through 75, it has a chance at 90 again. Especially that retail is strong. Apparently they're selling like hotcakes, and people are spending money like crazy. So, the bullish, still a lotto long position might still pay there. What's a lotto long is something that doesn't cost a lot of money and may participate on the upside. So debit call spreads. I will buy a call and sell a call higher and do it out in time to give myself some time to be right. I can even finance it by doing a credit put spread to bring in some money. That's just GoPro. And there are other stocks that I usually watch to see how they're going to break out. One that hasn't broken out is Alibaba. So if I'm bullish markets in general, Alibaba, this is a doji that's indecision. They don't know what to do with it. If I'm bullish markets, there's no reason why Alibaba should sell off right now. So, and every time it gets close to 100, it gets buyers. So if I'm bullish markets, I may want to go long it. However, I haven't personally done it yet. I've done it and backed out of it by booking some profits, but I may want to do it. Cautiously, I could do it via credit put spreads down here out for January probably. I still get some premium. And maybe if I'm really bullish, I can buy some debit call spreads with that, or just some leaps, finance some leaps out in time and forget about it. Alibaba's best play is long term and not to have to sweat the individual. So bottom line is, I'm not chasing anything. I'm setting trades based on fundamentals. There's so much that needs to go right in 2015 in order for this bullish thesis to blow up just like 2013. I'm not buying it. And most importantly, maybe you've heard fight the Fed, don't fight the Fed. Well, if the Fed is raising rates in 2015, does that flip? Meaning don't fight the Fed, meaning don't go along because the Fed is raising rates? I don't know, something to chew on. All right, Nick Shaheen signing out.